how I think about finding great stocks. Here's the truth that most people really don't want to hear. You think you need to hunt for the next big winner. You don't. Hot tips or flashy trades aren't going to help your long term success. What really matters is simply staying invested over long periods of time and doing it consistently. Consistently, ideally, means dollar cost averaging or simply investing a fixed amount every month. Good markets, bad markets, all the time. It's a commitment to your long term financial independence. I know it's not easy, especially when the market's down. It's scary. However, I'm here to try to teach you what has worked over time and what has the possibility to continue to work over time. One practical approach is to focus on established dividend paying companies that have stood the test of time. They're called aristocrats. Another option is owning an index fund, the spiders or the QQQs, or a mutual fund that holds strong income producing businesses that throw off dividends. The strategy is simple: invest regularly, add money every month, and stay the course for many, many years, maybe even your whole entire lifetime. Markets are going to fall, they're going to go up, you're going to have bear markets, but overreacting emotionally is where people get hurt during a bear market. Think about companies you already know. I mean, this is common sense. You probably use their products and services every day. And this familiarity can give you trust long enough to remain investments during good times and bad. Think about it. Coca-Cola, McDonald's, Johnson and Johnson, you name it. I mean, Microsoft, they're not going out of business. In your free time, learn how these businesses actually operate. Ask a few simple, basic questions. Do they consistently make money? Are they buried in debt? Or is it manageable? It's very important, debt. Are they improving year after year? Are the leaders of these companies competent and honest and trustworthy? These questions form the foundations, really, of a smart investor, like Warren Buffett. Companies, like students or us, we get evaluated. And instead of report cards, these companies publish financial statements. And, without making it complicated or the jargon, the simple question is, how is this business doing? Are they making money? So I look for steady growth in sales over time. It's like improving grades. I check whether the company keeps money after expenses, known as retained earnings or profit margins. I look at that. I look that they're consistently paying dividends. I really focus on debt because debt is some borrowing cost is normal, but excessive debt can become a very, very serious risk. So many investors look at these factors. What really truly separates successful, thoughtful investors from gamblers is patience. Listen to that word again: patience. Imagine you plant a tree. You don't dig it up every year to see if it's growing, or you plant a seed and you watch it every minute of the day. You water it, you protect it, you give it time, it nourishes, and then eventually it grows. Investing's the same thing. So you want to find quality businesses, allow them years and decades and even most of your life to compound. I mean, just buy Coca-Cola and forget about it. Buy Berkshire Hathaway, you forget about it. But these are your choices. Constantly checking prices and panicking over short-term drops is the opposite of long-term investing. Of course, no investment is guaranteed. And there are going to be bear markets. And past results don't promise future success. And you know what? Risk is always part of the equation. Risk is also doing nothing. This is simply a framework that I use to think clearly, stay disciplined, and most of all, really the biggest lesson is never let anyone else control your financial decisions. I'm not saying me because I'm not your investment advisor, but not your friend, not a so-called expert or banker. Do your own homework, do your own research, develop your own judgment. You got to be smart. It's not complicated. Investing is a skill, but the more you build it, the more confident you'll become. And you know what? You'll become more confident during these difficult markets, which will happen. That you stay the course. You stay patient. Again, patient. And this will give you this hopefully lasting success on your investment journey. And that's what I'm here for. Comment. Let's try to do this together. Thank you.